Yeah, good morning, everyone. Sorry, I just slept off. If you can hear me, put it in the comment section. Let's communicate. If you can hear me, put it in the comment section. Okay, you're all welcome. I just stood up. I just stood up here. Like I was like, let me just close my eyes for some seconds before the class will start. And boom, it's almost 1 o'clock. How are we doing? How was our day? That's good. I'm happy to hear that. So, not to waste much time again, yesterday we basically discussed about trend line, support and resistance, which some people call demand supply, premium discounts, or liquidity. And I mentioned how to trade it. And yeah, today when price got to, let me say, immediately price entered here, this green, this green candle here. Immediately I saw it. What's this? Oh, forgotten. On this green candle, immediately price got there. I enter a trade and I close it at 150 pips. And it did all. I did over 200 pips, but I closed the trade at 150 pips. I just did the analysis. I used that equidistant stuff. I showed you the analysis yesterday. Let me let me turn the screen. Is it this distance? Distance. Okay. Ouch. Oh, sorry. I've mistakenly turned off the system, so I have to wait. I have to wait for the system. So, and to the one you sent to me, like I said, there's nothing difficult in forex, except you just want to make it difficult for yourself. Just follow it as simple as it is. You don't need to force any line, any support, any resistance from anywhere. Just look at the charts. Just pick it. Look at the charts. Like I said, ensure it's okay. Just ensure it's where price actually make a significant movement, right? Okay, let's say I'm picking this point. Now look at this point here. You can see when price got here, price made a significant movement, right? Now this is one. If it is horizontal, you can easily pick one first since you are using horizontal. Let me go to MTIF. The same thing is here. This horizontal line. Once you pick it, ensure you are on the tip. That's the high of the candle. You are picking the high of the candle. You are picking the high of the candle, right? So price got here, moved down significantly, and price did this again here, right? Price got here again and moved significantly. Price did it significantly. These are good resistance zone. These 2 points, this zone, they are good resistance zone. Today I'll be showing this resistance zone. By the time you zoom out and you checked, I mean you zoom in and you checked, you realize that there may be another block there, maybe on H1 or on H4 or on M15. There will be another block here which will mark this zone as a good support or a resistance zone. We should mark it, right? One, two. This make these supports, I mean this resistance is a strong one. Now in the nearest future, it has high probability of changing the direction of the price. So I pick these 2 points now, pretending as if I didn't know what happened here. Like we didn't see all the candle that has happened or that will happen. I pick this and this. Then now let's move and let's see if there's any. Okay, you can see now price is hovering around this area. Price is hovering around that zone. Okay, but basically just follow the support and resistance of just pick it. In as much as you have a significant movement, here is one. You can firstly pick one. Then from that one, check if there is any other around that zone. Say this is another one, right? Making it two. And now see, okay, this was the one we pick. Okay, now see, you can see when price got there, it made a significant move. And at this point now, here now is doing divergence. You can see here now is doing divergence at that zone, which confirms the sell. Like I said, once it gets there, just do 50 pips stop loss. Since it's gold on gold chart, do 50 stop loss. If it is Euro USD, do 25, 20 pips stop loss. If it is GBP USD, do 30, 35 pips stop loss. If it's GBP JPY, you can do 40 or do 50 pips stop loss. USD JPY, do 40, 35 pips stop loss. If you should hit the stop loss, don't panic, just wait. Let it do whatever it wants to do. It will give another entry, which is sure. All right. You can do your analysis on H1, on H4. Okay. And to talk more about it, some will talk about confluences. Like once you pick the resistance on H4, go to H1, maybe it's there, go to M30 if it's there, then go to M15, go and take entry. All those ones, they are just stories. They are self justifications. I will say that it's just somebody trying to prove that he is a good analyst or is a good trader. That's just my own assumption. If it will work, it will work. No matter where you pick your resistance from, on H1, on H4, on H2, on 3 hours, on 30 minutes, on 15 minutes. If it will work, it will work. If it won't work, it won't work. So you don't need to force it at all. At all. See this zone now. One, this is one, this is two. Now price got there and moves, right? Significant. Just ensure it's a price where there is significant movement. All right. Amos wasn't here yesterday, so I've sent him the video. I'm just using this medium to talk about it again so that once you are going over the video, you understand better. All right. So before I continue today, any question? I want you to ask question. Any question? Like I said, if you know you need to talk, you can call me on WhatsApp. My phone is right here before me. You can easily pick it. You don't need to force the line to make it conform. No, you don't need to. Yeah, any question before I continue? Like I should talk about support and resistance again. Okay, like you are picking be it support or resistance, right? You are picking the high, you are picking the high. Like once you picture price move significantly at a particular place, right? Let's assume we didn't see all this. Let me go to H1 or M30. Let me use H1. Now I zoom out, right? I zoom out and I'm yet to see what has happened here, right? I only notice, okay, at this point, now I'm taking this, now I'm taking another point now, right? At this point, price moved up. At this point, price moved up significantly, right? I take my horizontal line, I pick the low, I pick the low of this candle here, right? Now picking the low of this candle, let me see again if price at this point again, price got here and moved, right? This a good movement. Okay. So now there is probability, there's high probability that or there's high tendency that when price gets to this line, let me call it line, to this horizontal line in the future, there's probability that price will change direction from there. There's high probability for price to change direction from there. Okay, so now let's check if there is a place like that. You can see one price got here, price moved, right? Price came here, break the structure, here, break it, break it, break it, here moved, right? And here also moved. Now with this alone now, we've taken how many trades? One, two, three, four, five. No. One, two, three, four, five. We've, we took 5 trades, right? Out of those 5 trades, we lost this, we lost this, we won, we won this, we won this, and we won this, right? Now, like I said, let when price got here, you take your trade, set 50 pips stop loss, and TP. Now, this now should do. Let me take Fibo. No, no, no. Sense, no. I'm trying to take magnets. No, this table. Yeah, I've used this before. Rectangle, triangle, brush. Oh, this should be here. Okay, price range. Price range. Now, this now is this 5,442 points, right? So that means we have 542 pips from here down to this place. So if you want to take this trade now, let's assume we are using 50 pips stop loss, then our TP is on 500 pips. Here now we've done, that's 1:10, right? Here now is 1:10 in profit. Let me open MT4 before these people will continue to threaten me. Let me open MT5. Now here we are taking by, mind you, we are taking by price coming from up. Here now we ought to enter a buy. It will hit stop loss 50 pips. Here we are taking a buy. It will hit stop loss 50 pips. Here we take a buy. This one will give profit of uh, this one is 350 pips, 361. This is 350 pips. It's because it's pointing down, so that's why it's showing minus. Because it's pointing down, that's why it's showing minus. Still the same direction. That's 360 pips. So let's assume it's 350 pips, right? And 50 pips stop loss. That's 1:7. So we lost one. Don't forget that we've lost three. How many? One, two. We lost two, right? Which is 100 pips. And we've made, here we made 500 pips. Here we make 350 pips, which has covered for our losses. And this is another trade again. And that also, that reminds me, anytime you enter trade and it's in profits, majorly on gold, if it's in profits, it will be moving like fire. Like it will be moving like fire if it's entering profits. And if it wants to go back, it will slow down and you see sign that this market might reverse back. But once price has done a significant movement, maybe your target is maybe 1:2, 1:3, 1:4, 1:5. Once you've realized that you've meet up with your target, you can close the trade, wait for another entry again. Okay. Let me share window. Share. Okay, this is Euro USD chart. Let us use this for analysis. Let's go to H1. Let me use M30. All right. Like I said, we are looking for points where there is significant price movement, right? Okay. So when price got here, okay, let's firstly see here now. There is a good movement here of how many pips? Let me check. This 40 pips. Okay. 40 pips on Euro USD can be much. This is 103 pips, right? So here now we can see significant movement. The same thing applicable here, significant movement. So let's assume that you pick a, let us pick this. I take horizontal line. I'm picking this. And also you can use the low or the high of the candle, or you use the body of the candle. Anyone you want to use, just follow it. It's still the same thing. If you want to use the body, you ensure you are using the body. If you want to use the wick, also use the wick, or the low, use the wick or the high, or you are using the body. For example, this now you can use the body or you use the high. They are all the same thing. All the same thing. So anyone you want to do. Now I'm picking the body, right? I'm using body now. I've used week. Now I'm using the body to do the analysis. Okay, I pick this. There is a significant movement here. The same thing applicable to this is a good movement. So let's see if price, if this support has another support somewhere. You can see this was the last time the support worked. See it here. You see price moved before price came to break it. So let's assume we pick this. We're waiting for price. At least it should be twice. Like I said, before you can take trade, price must have reached the support or the resistance line twice. So you are taking trade on the third one. You are taking trade on the third one. The only reason or the condition that can make you take trade on the second one is when you are using equidistant support and resistance. That's when you're using equidistant support and resistance. But if you are doing normal support resistance, let it get there twice before you take decision. So you can see here now, this is the first one. This one, price didn't do anything. Okay. Let me change the color of this. Let this one be blue. Let it be blue. Okay. Okay. This one for the red, for the support. One. We have one. Actually, this is another place. This another place, but this one is for sale. So we are waiting for buy. Like I said, support is for buy, resistance is for sell. Support is for buys, resistance is for sell. This is it again. Price got here now and do what? Change direction. Also, that means we have two strong points where price change direction. So in the nearest future, there is probability of like 90% that when price gets to this support, price will change direction. Price will change direction. Sometimes support will change to resistance and resistance will change to support. Okay, and that's why like I said yesterday, you don't, once price gets there, you don't allow doubts and be like, price can break this. No, let me wait. Let me see if price will break it. No, 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 no. Like I said, once price gets there, don't hesitate to take your trades. And in addition to that, once price gets there and is doing rejection, once price gets there and is doing rejection, it's another confirmation for you to take trades. Rejection like this now, you can see price firstly break through the line but did not close below the line. That is rejection. That is rejection. It means price is rejecting off that zone. The same thing applicable to this zone. Yeah, this is rejection. Price gets here on this. You can see price break out of the line and came back into it. That's rejection on that zone. The same thing applicable here. You can see price got close to it, it's still the zone, rejected, came back again, reject. These are signs for you to take trades on this line when it's changing to support, when the support is changing to resistance or the resistance is changing to support. It can happen like that. Just like when price break through the line, it has turned to resistance. It's now acting as resistance here. Now price breakthrough coming back, it has turned to support. Now let's consider this also. Price here, this now is our resistance, right? Price got here, change direction, and let's see, you can see this now. Let me do the calculation. If this is up to 20 pips stop loss, no, it's not up to 20 pips stop loss. So if we are doing 20 pips stop loss, this is where the stop loss will be, and it gave a good profit of 1:4. This 80 pips of 1:4 of 1:4. This gap is another sign for someone to just break even and let the trade run. It's another sign there. Okay, but notwithstanding this for sell, you can see when price got there, you can see price change direction for buy. At this point in time now, this line, this resistance line is turning support here. It's acting as support here. Here is acting as resistance, right? Here is acting as resistance. You can see acting as resistance, acting as resistance. Let's see if this will hit stop loss. Yeah, this one hit stop loss. This one hit stop loss. I wish we have a live trade running. Okay, so here now it's acting as resistance, acting as resistance. It's turned to support. It has turned to support here. Price came here. Price reject. You can see rejection on the zone. Price firstly rejected, but later break it. Then still come back, break, and price moved. Right. So, like I said, once price is on the zone on the line, you are taking your trade. Then you set your stop loss. Okay. So to these 2 points that I marked out, we have a very good chance that price will get stand in the next future and change direction. Okay, like this now. If you pick this, like I said, you can do the body or the week, anyone you want to do. Why is this looking so tiny? Okay, you can see here now, picking the body of the candle here. You can see also the body of the candle here, right? This sign here and here is a good sign that this is a good resistance zone. You can see price is breaking out of it, trying to turn to support. So at this point in time, anytime you map support, if it is support that you pick and you place your trade, right, it hits your stop loss, you wait for it. Maybe at that point in time, it's trying to change to resistance. If the support is changing to resistance or the resistance is changing to support, you wait. If it's changing, let it change, right? Then coming back, if it has changed, let's assume this resistance now has changed to support. Let price break out, give significant movement. Let it give significant movement, 100 pips, 80 pips, and above. Since it's Euro USD, let it do a significant movement before price coming back to the line to pick entry. If the movement is not that significant, maybe it's just 40 pips, 50 pips, you can still ignore it. But let it do a significant movement of like 100 pips. That makes it much more stronger. It's just like if you want to build house, the foundation for two-bedroom apartments, you can't use the foundation of two-bedroom apartments to do skyscraper. You will just give room for disaster, right? That's what I can say about that. Repeat what you said now, okay? So I've used over 30 minutes, almost 40 minutes now to talk about support and resistance again. Any other question? All right. So support resistance, two valid points and significant movement. It can also be trending. It can be trending, maybe moving up like this. This is one, this is another one. Significant movement here, significant movement here. So pick this and this. So in the next future, there is probability that price will definitely move down. Let me go to the screen. So this another one which has high probability that when price gets here again, it will also move up because we already have 2 points of significant movement. Okay, definitely we'll still talk about this again, but for now, just go over the video, you'll understand better. That's selected. Okay, so today I want to move forward and talk about candlesticks. I want to give descriptions on candlesticks. Which this one should not take more than 15 minutes, if not lesser than that, because I just want to talk about it, provided you want to use it to be doing analysis, okay? Or you watch video, you want to be using it as part of conferences for trading. That's why I want to talk about it. Literally, I don't use candlestick to trade. I do use support and resistance By the time I'm talking about chart patterns, all of them, you understand the support and resistance better. When the support and resistance they are forming different kind of shapes, that's what all those patterns, all those patterns, that's where they come from. They are, the support and resistance is forming shapes, coming together, forming wedge, all those kind of things. It's still support and resistance stuff in a ranging market. So get there. Then all this pattern we are talking about, all this formation we are talking about, they are all candle formations. All of them, they are all candle formations. They are all candle formations. So I'll be talking about candlesticks. And don't mind me, I don't talk about history of forex, history of. I'm not used to history, so but notwithstanding, so candlestick was initiated by Japanese merchants. They were the one that decided to use it for their stock for their rice market. Yeah, in I've forgotten, maybe like 80s or 90s, early 90s, like that. I've forgotten the year, but they're the one that originated the candlesticks. Initially, they were using line bar charts to do analysis. So basically, candlesticks they are divided into two. We have bullish and bearish, right? We have bullish and bearish, and the candlesticks now combining two, three, and above, they combine together to form different patterns for reversal, that is changing direction of market, to give signs that price may change direction from here. Two, three of them can come together and give signs to to show that price is changing direction. To show that price is changing direction. So that's why they call it candlesticks pattern or candlesticks formation. Okay, so we have bullish formation and we have bearish formation. All right, so I will start with bearish formation, bearish candlestick patterns. Let's put it that way. Bearish candlesticks pattern. You can take your pen and write as I list them. Then I'll try to say, let me see how I can show their pictures. So after listing them, we just show their pictures and we talk about it, right? So I'll start from bearish candlestick patterns or bearish candlesticks formation. The first one is a hanging man. Hanging man. Just from the name, you put rope on the neck of someone, right, to hang the person. When you put rope on the neck, there is still head. The head is, we have head above above the rope, and we have the other body below the rope, right? So we assume the rope now is the open and the close of the candle. The rope now will stand as the close and open of the candle, while the head part is standing as the wick of the candle, and this body part is standing as the wick below the close of the candle. This will be the wick above the close of the candle, then wick below the open of the candle. Right? Yesterday I talked about open and close of candle. If it is uh, both at bullish or at bearish stuff, right? Let me use this again. I'm zooming out and I'm zooming in. Now, like this, okay, look at this now. Look at this candle. Or let me use this one. I'll use this. I think this will be better. You can see this is the head here now. This is the rope, which is the close and open of the candle. The open and close of candle is called the body of the candle. Why this is wick, wick up, wick down, small wick, bigger wick, then the body of the candle. So once the body of the candle, we have small wick above the body of the candle, and we have these two wicks. One is longer than the other. Then this becomes an hanging man. It becomes a hanging man. Some people call it pin bar, but there are names. We call it hammer and so on and so forth. So that's so what's it called? That's hanging man. We have hanging man. Then number two, dark cloud cover. Dark cloud cover. Dark cloud cover. Dark cloud cover. Right? Number three, bearish engulfing. Bearish engulfing. Bearish engulfing. Bearish engulfing. Number four, evening star. Evening star. Three black crows. Three black crows. Three black crows. Then another one, three inside down. Three inside down. Three inside down. Three inside down. Next one, bearish harami. Bearish harami. Bearish harami. Bearish harami. Next one, shooting star. Shooting star. Shooting star. Next one, tweezer top. Tweezer, Tweezer. Tweezer top. Next one, counter attack. Bearish counter attack. Bearish counter attack. Bearish counter attack. Oh, okay. Bearish counter attack. Let me see if I can copy. Copy. No, don't paste here. Google Doc, blank, Control V. Okay, let me stop sharing this. Oh, no. Documents. Share. Okay. Bearish candlestick sticks formation. Okay. Where did I stop? I'm on tweezer top, right? Tweezer top. Yeah. Tweezer top. Then next one. Okay, bearish counter attack. Bearish counter attack. Bullish and bearish spinning top. Bearish kicker. Evening star doji. Bearish abandoned baby. Groove gravestone doji. 3 star. Deliberation. Upside gap. Two cross. Advanced block. Rounding top. Triple top. Bearish steak sandwich. Like this sandwich now is pattern formation. Is pattern formation. Breakaway. So these are all of them. They all candle formations. Like I said, all patterns, all charts patterns, all those diagrams, they are all candle formations. They are attributes of candles. So these are for bearish pattern. So let's go to bullish pattern formation. Bullish candle sticks formation. All right. So this and bring this down. These are bullish candlestick pattern formation. Okay, hammer, inverted hammer, piercing pattern, bullish engulfing, bullish spinning top, morning star, three white soldier, three upside down, three inside up. Sorry, three inside up, bullish harami, Caesar bottom, bullish counter attack, bullish kicker, bullish Abaddon baby, Morningstar, Dragonfly, Three Star, or TriStar. TriStar. This should be high cake, high cake. Then counseling, baby swallow, unique three rivers, rounding bottom, bullish stick, sandwich, breakaway pattern. All right. These are charts. These are candlestick patterns. They are candlestick patterns. Oh, there is gravestone here. Gravestone, gravestone, gravestone. Okay, yeah, gravestone doji. Okay, so these are candlesticks patterns. What I will enjoy us to do is each of them type it on Google to check the image. On Google, you see different images on each and every one of them. If you want to be doing that now, it will take a lot of time. This is another reason, someone was complaining on the group that it will take. Am I sure I will be able to achieve all these things because it actually take time. So if you are hearing me, please write comment that you are hearing me. Comment if you are hearing me. Comment if you are hearing me. Comment if you can hear me. Okay. Richard is hearing me. OS. And please try to like the live. Click on the like button. Let me also log in on my side, yeah. Okay. Let us like the live. Let's like the live. And if you are yet to subscribe, try to subscribe. If you are yet to subscribe, try to subscribe. Okay, so any should I we can easily do that assignments. Type each of them on Google and check all those formations. Can we do that so that I can proceed? Can we do that so that I can proceed? Okay, thank you. So to that we leave candlesticks, we move to other part of analysis. Still on analysis, like I said, analysis, chart analysis is what will definitely take much more time. And as I'm talking about chart and analysis, definitely I'll be talking about psychology and how you will make money, right? The psychology I've mentioned here now is you don't allow doubt to make you not to take trade. Once price is getting, since you are using support and resistance line, once price is getting to the support, take your trade. If you should hit stop loss, wait. If the support is changing to resistance, let it change, give a significant movement, then price will come back, you take your trade. If it's changing to, if maybe support is changing to resistance, once price is coming back there, you look at it. If there is rejection, that is a good sign for you to take a sell, since resistance is changing to, no, if resistance is changing to support, you are taking a buy. Resistance changing to support, you take a buy. But before it will change, since it's still resistance, you are taking a sell. It's after the sell hits your stop loss, that is when you think of taking a buy. Don't be scared of stop loss, of price hitting stop loss. That's why you don't need to risk all your money at once, except you want to gamble. But like I said, I'm explaining forex trading. Trading has to do with you setting stop loss, using percentage of your money. You are using 10% of your money, 5%, 2%, 1%, 0.5% of your money to trade, depending on the capital, right? There's some capital, if you are using 0.5, it will be a very huge amount. Using 0.5 to trade, you have to reduce it depending, okay? And that has to do with your lot size calculation. We'll still do that one. We'll still talk about stop loss calculation. Stop loss calculation, pips, then lot size. How you calculate lot size. They are all very simple. So let me talk about that before I continue on analysis. How to calculate stop loss. I mean, how to calculate lot sizes. How to calculate lot sizes. We have calculators for it, but literally, let's assume you want to use 50 pips for as stop loss, right? We are using 50 pips as stop loss. Let me be writing it down. Down. Or let me go to calculator. No, let me use this. We are using 50 pips stop loss. 50 pips SL. 50 pips SL. Right? If you are using 50 pips SL, and let's assume the account is 10. No, let me use 5,000. It's $5,000. The account is $5,000 and we're using 50 pips stop loss. Okay. Now let's assume let's basically calculate if you want to use 0.5% of this $5,000 to trade. Okay, let's use 1%. 1% of $5,000 should be 50, right? 1%, 1% of $5,000 is $50, right? Are we together on this? This is mathematics, so you need to understand it. 1% of 50 of 5,000 is $50. Okay, so if you are to risk $50 and we want to use 50 pips, now this is easy and straightforward. Simply means if since our risk is $50, then we are using 50 pips equivalent to, where's equivalent sign here now? Let me see. Okay, let me use double of then we have 50 pips, right? At this point in time now, we use 0.1, we will use 0.1 lot size. That means our lot size will be 0.1. Since we are risking 1% of our trade, of our account, then our lot size will be 0.1. So you can use this as a standard to do other calculations. Since 1% is what you want to risk, so that means if, let's assume now the account is $20,000, 20K dollars. If it's 20K dollars, that means you are multiplying and 5K by 4, right, to give 20K. So that means this, your lot size will be what? 0.4. 0.4 lots. That's this 0.4 now will stand for 1% of 20K. That means you are risking 200 dollars on 50 pips, 50 pips SL. Do you understand the calculation? Do you understand the calculation? Comment yes if you understand the calculation. Or if you want me to do it again, let me know. Comment yes if you understand the calculation. Okay, that's cool. So if the account is what part not supports this PDF flow is not construction. Open with this. Is not what I'm looking for. It should be showing. Yes. All right. So that's risking 1% of accounts. If it is lower, let's assume now you have $200. Let's assume you have $200. So this now, that means this 5,000, we've divided it by, okay, let me use 500. Use if you divide 5,000 by 200, how many times this? If we use calculator, this calculator, no, calculator, ouch, no, calendar calculator. 5,000 divided by 200, that's 25. Okay, so here now we have we have to divide this 5,000 by 25 to get 200. So that means the lot size, if you divide 0.1 by, I mean, if you divide 0.1 years by 25, that will be very, very small. 0.5 cancel, 0.1 divided by 25, that's 0.004. So simply means that if your account is anything lesser than 1K, you will be using the smallest lot size to take risk on the accounts. Or you basically do the calculation. Maybe if it is $200 now, let's assume you want to risk $20. You want to risk $20 for the trade, right? $20 is 10% of 200, right? So if we are using 50 pips as stop loss, then the loss size we'll use, since we are risking $20, 50 pips. So if we divide, that should be 0 point 0.04. Is that correct? Yeah, 50 pips should give to give $20. That's 0.04 or 0.4. Is it 0.4 or 0.04? No, it will be 0.04. If it is 0.4, 0.4 will be 50 pips for 0.4 will be $50. 50 pips for 0.4 will be $200. If you are using 0.4 for 50 pips, that will be $200. So it's 0.04 to give $20. So we are using lots. We'll use 0.04 lots. Okay, 25, yeah. So to this 200 stuff now, is anybody understand? This one is looking so straightforward, but here now is looking somehow twisted. Who understand this? Now I'm calculating for $200 separately using $20 stop loss, which is 10 pips. I mean, 10% of our account. So the major thing is, like I said, let your stop loss keep it constant. Don't be changing it up and down. Calculate the amount you are willing to risk and take your trade. Right. And if you want to take stop loss that is higher than 50 pips, do your calculation. How much do you willing to lose? Are you risking your whole capital for gambling sake, or you want to trade and get profits? Anyone you want to do, you have to choose. Calculate your loss and your lot size, then initiate your trade. You can also you can just type on Google pips calculator or lot size calculator. It will give you out. We have so many of it online that you can use to do the calculation without doing all these calculation I'm doing here. But I prefer doing all these things myself. You can also use the calculator. It's still the same thing. Still definitely give you the right answer, the right lot size you should use based on the information you impute. But before you can impute information, you must know how much you are willing to lose, the percentage you're willing to lose, and where your stop loss will be. You must know the two of them before you can get your lot size. All right. And if you want to initiate trade, once you open your account, it's just market has closed except for BTC. BTC will still be running. Cryptos will still be running. Let me check. It's just now currently the price will be very slow. Okay. This is BTC charts. Now this is BTC charts, right? If you want to remove this graph, okay, let me share this screen. So to the low sides now, I'm sure we are cool on that. So let me share window. I'm picking this share. Now I'm on MT5. I'm on MT5. Right. Now let's navigate through this MT5 and see how we trade. Message retracted. Okay. How we play trade and okay, now looking at this, all this graph stuff, we can remove the graph. If you want to remove this graph, you are pressing Ctrl G. It will remove it. If you want to bring it back, you press Ctrl G. It will bring it back. Removing is Ctrl G, right? Also, if you want to put a daily or period separator, you are pressing Ctrl Y. It will bring out this daily or period separator. Then Ctrl Y to remove it. Ctrl Y will remove it. Okay. To make the candle bigger, since it's in bar chart, we change it to candlesticks. All right. Then you zoom out. You are zooming in. In will make it bigger, out will make it smaller. In will make it bigger, out will make it smaller. All right. Next thing you need to do now, if you need to change the color of these candles, if you want to change the color, right click on the screen and go to properties. Okay, let's leave the background to be black. If you want to change it to white, you also pick it. Any color you want to change to, if you want to change it to red, to purple, any color you want the background to be, you pick it. Let me pick this color now. All right. The foreground, the foreground has to do with, you can see all these white lines. That's the foreground. The price, which is white, is showing the foreground. So we can leave it at that. Or if you want it black, you can change it to black. Then the gray has to do with the grids. You can see this price line is gray. All right. That's that. Then the bar up is the candle going up. So you can change it to a dark green, forest green. That's bar up. If bar up is forest green, then bull candle will be forest green. Any green you want to pick. Then the bar down, if we are making it red, then the bear candle will also be red. You can see now it's changing color, right? To the volume, you can leave the volume or you change the color. Line graph, if you are using line graph, this is what the color will be. All right. Ask and stop level, where you put your stop loss and TP, it will be showing red. Your entry also will be showing red. So we have this. You can see the color I changed to the background and all the colors are here now. That is how you change color of candles or the background. You can make everything the same color, whichever color you would like to use. You have the chance to do that. And you can, if you notice, sometimes my charts I do pick some colors different from green and red just to show the charts. I love it colorful sometimes. Okay, so that's how you do that. Then if you want to place trade after doing your stop loss calculation, oh, I thought if I'm sharing the right chart. Okay, Control M. Now this BTC chart. Okay, and that reminds me, after setting this up, you can decide to save it as template. You also right click on the screen, you go to templates. On the templates, you click save template to save this chart now that we just created. So let me call it let me call it okay, let me just make it new chart. Let me make it new chart. I click save. Okay. So anytime I open any chart, okay, let me open a new chart. I'm opening this now. You can see this one is now, instead of pressing Ctrl G, changing the colors again, all I just need to do is to right click on the screen. I go to template. I will see new chart. On the new chart, click on it. You have this. So instead of changing the colors again, once you save the one you've changed, you can be using it on any chart you just opened instead of changing color over and over again. All right. So I go to BTC. Now to show this market watch or currency pairs, you are using Control M. To make it come back, you use Control M. To make it disappear, you use Control M again. You're using Control M for that. Okay, so now I go to this chart. Let's assume we want to take trade. You click on new order, click on new order. Then on new order, we have two different types of orders. Two different types of orders. We have market execution order and pending orders. Market execution order and pending orders. Market execution means you should enter the trade immediately. Pending order simply means you are forecasting a buy or a sell in the nearest future, or where you think market will get to and pick your order. That's pending. Like you pend it, something that will happen in the nearest future. You pend it, right? But market execution means it should happen immediately. This is applicable to all platforms. Like now, when we click on new order, this came up. Volume is the lot size. We already have 0.5 lot size here. What we are trading is BTC USD, that's Bitcoin, right? Then we are doing market execution. For now, let's do market execution. We can set our stop loss and TP directly before entering the trade, or you click on, let's assume we want to buy, we buy, click on buy. You can hear the sound. Okay. Once you've entered your trade, you put your cursor on your entry line, you drag it down. If you look at the line to the extreme, it will be showing SL. To the extreme, it will be showing SL. Let's assume our stop loss will be here. I accept. I accept. Press OK. Now you see here now it's showing stop loss, right? Then if you see here it's showing TP. So stop loss, TP. That's take profit. So we're saying that once price gets to this zone, please give me my profits here. And if you get here, stop loss, I'm no more willing to lose more than $546. That's the amount I'm willing to lose into this trade. And if you should move in my profits, this $1,046. This is 1:2 trade. All right. So this is a good trade to take. Then we let the market run. That's how you execute trades. And to pending order, we have 6, 8 different type of pending order depending on what you want to trade. On cryptos, maybe you are using Binance app. We have almost 10 different orders there. Okay, so to pending order now, if you click on pending order, to pending order, we have four. Basically, we have 6. The TP and stop loss is also pending orders. They are pending orders. All right, that's true. Then we have buy limit, sell limit, buy stop, sell stop. Buy limit, these are pending orders. Buy limit, sell limit, buy stop, sell stop. Okay. Now, this is where price is, right? If you click on buy limit, right, we put price here. Don't forget, currently price is at 107,800, right? So let's put 10800. You can see that it's showing that you should place. Okay, basically, let me explain by so that it's not confusing, right? So that it doesn't confuse. Please, if you have any question, try to type it so that I can see it. Anytime you have any question, try to type it so I can see. So to buy limit, let me go. Buy limit simply means let's assume now price is selling, is going down, price is going down, right? And you are saying that once price gets here, it should go up. Then you set a buy limit order. Price is selling, and you are saying it should change direction and buy. Then you call it buy limit. I say it again. Price is selling, and you are saying at that point in price should change direction and be buying. That is buy limit. Okay. If it is sell limit is the opposite. Price is buying, and you say at that price it should change direction, it should sell. Then what you will put is limit, sell limit. But now to buy stop and sell stop. Buy stop is you are saying that once price gets here, it should keep going up. That is buy stop. You set the order that when price gets here, it should keep going up. You should keep buying. That is buy stop. Same thing applicable to sell stop. That okay, once price is selling, right? Is selling. You are now saying that once price gets to this zone, it should keep on selling. You will put a sell stop. Sell stop deals with continuation, buying continuation, sell continuation. Buy limit, sell limit means that change in direction. If it is buying, it should change to sell limit, sell limit. If it is selling, it should change to buy. That's buy limit. All right. Let me look for image. Let me look for image. Okay, I've seen one. I'm seeing one. Let me share the tab. Pending order. Okay, you can see it. Buy limit is selling. You are telling it to change direction and be buying. Sell limit is buying. You are telling it to change direction and be selling. Buy stop, you should continue buying. Sell stop, you should continue selling. As simple as that. So it means if you want to set buy limits, for example, you will set buy limit below the current CMP. That is, once if price is selling, you will put it below so that if it gets there, it will change direction. That's if you want to set buy limits, the price will be below. Okay. Now to this, price is currently at 107. It's currently at 107. Here I put 108, right? Let's see if it will place it. You can see now, you can see the sound it said invalid, meaning where I put the price is not correct. Now let me change the price now to 106, which is below current CMP, right? I place it, you can see it allowed it. It simply means that is correct. So what I've done now is I put that once price gets to this place, price should go up, it should change direction and be going up. That's the meaning of buy limits that I set. Okay. Now let me pick and do market. I'm in pending order again. If it is sell stop, now sell stop is opposite. If you are setting the price below the CMP, CMP simply means current market price, current market price. If you are setting price below CMP for buy limit, that means price will be above for sell limit. So if it is sell limit, then we use let's use 108. 108. Then let's place it. You can see now it's allowed it. Simply means it is correct. Okay. That's for sell limit. So I'm saying that once price gets here, it should change direction and be going down. That's sell limit. Like I said, both of them they're opposite each other. I want to delete it. If you want to delete it or modify it, just put cursor on the line and right click. You put your mouse cursor on the line and right click. Wipe it off. Same thing applicable to this. Right click and wipe it off. Okay. If it is a sell stop, like I said, buy stop simply means you should continue buying. Sell stop simply means you should continue selling. Since you are saying you should continue buying, it means for buy stop, price will be above the CMP. Price will be above CMP for buy stop. So 109.23 to place, it will allow it. Simply means once price gets here, it should keep going up, right? And the opposite will be for sell stop. Sell stop now, price will be below CMP, meaning that you are saying that once price gets there, it should keep going down. It should keep going down. That's to pending orders, and that's how you set pending order and the market execution. Then if you want to modify, you click to modify. Like I said, you can easily drag and put your stop loss and your TP to the ratio you want since you've done your calculation. All right. So to this, any question? You're not seeing me. It's dark. That's network issue. Can you see me now? Can you see me now? Okay. Did you see where was the last place you saw? Where was the last place you saw? The chart, okay. But to the pending orders, did you see them or do you understand? To pending orders, did you see them and do you understand? If you have any question on them, ask. It's dark again. What about now? What about now? Okay. So that means I need to talk about the pending order again, or do you understand the pending order? All right. So, like I said, we have four pending orders. We have four basic pending orders. We have sell limits, buy limits, sell stop, buy stop. Okay, you understand. Richard, what about you? Do you understand the limit orders, like the pending orders? If not, let me go over it again. Okay, so I talk about it again. Pending orders. We have basically four of them. We have six. TP, stop loss, and TP, both of them, they are also pending orders. Okay, but if you want to execute price, we have basically four pending orders. And the four of them, we have buy limit, sell limit, buy stop, sell stop. Buy limit simply means change in direction. Price is selling. You're not saying it should change direction and be buying. At least was going down. You are saying it should change direction and be going up. That's buy limit. That's buy limit. If it is sell limit is opposite. Price is buying and you are saying it should sell. That's sell limit. Buy limit, price going up, and you're saying it should change direction. Why sell limit, price going buy limit, price going down. You are saying it should change direction and be buying. That's buy limit. Sell limit is price going up. You're saying it should change direction and be selling. That's sell limit. Do you understand that? Do you understand that? Okay. Now sell stop has to do with continuation. Price was selling and you say it should continue selling. That's sell stop. Buy stop, price is buying, is going up, and you say it should continue going up. That's buy stop. Buy stop, sell stop has to do with continuation. Continuation in buying, continuation in selling. That's the two of them. Okay. Now, if you want to enter them, you want to enter buy limit. The price for buy limit will be below CMP. price for buy limit. For example, now the CMP now is 1076 something, right? So if you want to set a buy limit, it will be below 107. So let's assume it will now be 105,000, right? If you place it, it will accept it. That means it's correct. You can see it down here, and you can see buy limit, right? Simply means this limits order now is not saying once price is coming down, once it gets here, it should change direction and be going up. That's buy limit. To sell limit, go to new order, change it to pending order, sell limit. The price will be above the CMP for sell limit. Price will be above CMP. CMP is 107, so we are picking 109,000. Then we'll place our sell limit. You can see that is we are saying once price gets here, to change direction and be coming down. That's sell limit, buy limit. If it is buy stop, buy stop, now we are saying price should keep on buying. So that should be the case. The price you will enter will be above the CMP. So if the CMP is 107 and you want to sell buy stop will be around 108,000. I'm using this chart because BTC is running. So on other currency pair, it will not work. All this entry will not work. But it's working here because price is still moving. Okay. That's for, and the opposite is buy stop. Opposite of buy stop is sell stop. Opposite of buy stop is sell stop. So that means price will be below the CMP. Price will be, I've closed the trade. I mistakenly closed it. So, Richard, do you understand? All right. So that is how you go about pending orders and how you execute trades and how you set your stop loss and TP. Okay. So you can see I'm yet to talk about indicators. All those ones are still part of analysis. Okay. So we have now I move forward to indicators. Let's talk about indicators. To see them on the chart, you press Control N. Control N. You will see indicators. You click on indicator. So we have all this. We have trending for trend and for oscillator. The one showing volume. And others. They were all designed to give direction of prices. They were designed to give direction of prices. If price is ranging, price is trending, that's why we have trend. If it's oscillating, like the movement of price, the one that will be showing movement of price, and the volume of price also. Okay, all these are there to be used. We have some people using them and they are making money from them, but I'm just talking about it now. I'm just talking about it generally so that if you see it anywhere, you don't get confused, right? We have all these ones trending: average direction movement, Bollinger Band, Ichimoku cloud, moving averages, parabolic SAR, standard deviation, I'm sure you've heard of Bollinger Band before. You've seen Ichimoku moving average. Some people are using it. They will tell you once it's cross, you enter sell or buy. All those kind of things. Okay. The trend, we talk about the crosses. Like to Bollinger Band now, we talk about once price gets to the lower part. I mean to the lower part you buy. If it gets to the upper part, you sell. If you want to make use of them, just click on it and drag to the screen. Here you change the volume. This period has to do with how wide you want it to be. If it is, let's see this 200 now, you can see when it is on 200, you can see how wide it is. Let me change it now. If you want to change it, you right click, band properties. Let's change it to 20. 20. You can see the way it is now, it has changed because of the period. It has changed because of the period. So basically, when price is on the lower line, you buy. If it's on the upper line, you sell. That's the basic way of using this. Some people will now combine another, maybe will combine moving average with it. That if the middle one should cross middle and should cross over, you enter buy. If you should cross down, you enter sell, and so on and so forth. Some people do combine two of them like that. Just drag and drop. You can see when it's crossed down, you enter sell. All those ones, they are using it. I'm just explaining how you go about using them. Now, this one will be crosses to take trades, right? Ichimoku cloud is also there. Ichimoku cloud is also there, and so on and so forth. Parabolics are, you can see all these small dots. Some people are also using it to trade and they are using it. Some people combine three like this together and use it to trade. I'm sure you must have seen so many of them like that, right? So if you want to change the colors, put cursor on the line, right click, you go to properties, then from there you see parameters, style, red, levels, visualization. That means where you want to see it. Parameters, you change the style to change it to any color. You can see it has changed to green. That's how you change the color. The same thing applicable to once it's this moving average. You can see it's showing moving average, right? Right click on it, it will go to moving average in properties. Click on it, change the color. Change the color. Okay. Now to oscillators. Oscillators will show on different. You can see the way this trend now is showing on the chart. Oscillators will create their own space. For example, let me use RSI. I click on RSI. You can see when I drag, you can see it creates its own space under the chart because it's representing what the chart is doing. That's why it's called oscillator. It's representing what the chart is doing. It's representing the movement of price. That's what oscillator is doing. So when we talk about oscillator, you talk about oversold condition, overbought condition. I'm sure you've heard of that before, and if not, it's with oscillator you talk about divergence, oversold, overbought, divergence. Okay. So the divergence is very common with analysis. I personally I use divergence for analysis, but most of the time because I'm already used to divergence, this oscillator I don't use to put it on my chart again. By the time I look at the chart, I will see that okay, price is diverging. Yeah, we still have so many other things to show divergence, but most people use RSI Some people use stochastic oscillator. Some use momentum. Some are using MACD, commodity channel index. We still have moving average oscillator. It's also there. Some are using it, but RSI is the one that is very common. Okay, to pick oversold and overbought. Oversold condition, that is when you will see price. You see this line entry 100, and it will be there for long. If it is overbought, then oversold, it will enter zero. You can see zero here, you can see 100 here. Price will enter there, price will enter here. That is when it's showing overbought and oversold condition. Let me see if we see any of them. We have any of them. Okay, now look at this place now. Now I want to talk about divergence. You can see price is moving up here, right? It moved up here, it moved up here. But when you come to RSI is moving down. This is what is called divergence. This is what is called divergence. Price moving up, then oscillator moving down. That's called divergence. Then it has already entered overbought zone, right? Once it's entry overbought zone like that, that's when divergence to occur. That's when divergence to occur most of the time. Most of the time. So this is divergence here. And if you look at this zone also, I'm picking cross air. You can see this place, this place. Then at this point now, you can see here, it's also diverging. This divergence. And if you want to pick divergence, if you pick the last, the like here now, this is where the divergence started from, right? If you should look at all of them, you will realize that no candle closed above the wick. I'm here now. You realize that no candle, once price is diverging, candle will not close above the wick of where the divergence started from. It won't. It will be ranging, ranging, ranging. Maybe there may be another candle here that may wick up and close down, and candle will continue to fill it up, fill it up, fill it up. At that point in time, you'll be seeing divergence. Divergence. So this is a typical example of divergence here. Now, looking at this now, price candle is already closed above this. This is already break of structure. We signal bullish momentum. This already break of structure. We can talk about divergence now. Maybe there is a wick up like this, and price refused to close above it. So once price is doing such a thing like this, the divergence will not be a longer one that can cause change in direction. No, it will just sell for a while. Then price will continue to be bullish. Price will continue to push higher and higher. So that's divergence. That's H4. On each one, the other time I saw one. Okay, here also is a divergence. You can see this place here to this here. That's another divergence. Let me change the properties of this and remove ray. This is also divergence. Yeah, it's also divergence. This and this is divergence. And so on and so forth. Let me see if you can still see other ones. You can see divergence here. And see divergence here. This also still divergence here. For price actually respected it. This one is very long. Here now is creating another shape here based on these candle formations here. Creating another shape. Break, retest, retest, and so. All right, so that's to talk about indicators and how to go about them. All right. So some people will want to use it now, be like, okay, if they are using Bollinger Band and RSI for divergence, once price is out of it, out of the band, out of it again, showing divergence is a sell. They use it like that also to trade. Okay. But the basic thing is you ensure that any setup you are using is giving you a good winning rate. Is giving you a good winning rate. That's what is much more reliable. Some people will combine this divergence Bollinger Band with support and resistance to show confluences. To show confluences. That's another analysis also. That's another analysis also. And so on and so forth. Any question on that? Any question on that? Any question on that? Okay. Also, if you want to see your balance, if you want to see balance, you press Control T, then you go to trade. Control T, go to trade. If you want to check history, you see account history. And see account history. If you want to check trade, that's where you see balance and equity. You see it here. Okay. And if you have a running trade, let's assume now you pick a trade. Okay, let me enter a trade now. I'm taking, let me enter a sell. You can see immediately I enter that sell. This popped up. This one show here. So this one is showing the running trade. You can see equity is changing, is fluctuating. If I put my TP, it will show. You can see TP is showing. If I set stop loss, it will also show stop loss. So this is the entry price. This is my lot size. This is the position I entered. This is the symbol, the currency pair I'm trading. This is my TP. This is my stop loss. This is where price is currently. Commission. Here now they are not taking commission. That means my account is not associated with anybody. Nobody introduced me to this. So no commission. Swap. They will charge swap if I should leave this trade overnight. That's from today. If I should leave this trade today till tomorrow, that's overnight. That's swap. Some will charge for weekend. In as much as you leave the trade overnight, it's called swap. It will be charged. This commission is what they do pay um, IBs, those that do introduce. Let's assume now an IB to any broker. Is this commission that they will be paying me once? Okay, let me say I introduce you now to any brokerage firm and you register and you place any trade. This commission will be for me. They will give me the commission. Any in as much as you are trading, I'll be getting my commission. This swap is for the company that you are leaving it overnight. Then spread is what commission is what brokerage firm used to collect. That's how they are making their own money through spread. Just for example, immediately I enter this trade, you will notice that it was negative. That's the spread. It will be negative. Let me click on new charts now. Okay. Now see this new chart. You can see the ask and bid price. Both of them, there is space between them. That's the spread. That's the spread. It's like Amos is no more here. That's the spread. So once you enter trade, it will firstly be negative, be it buy, trade, or sell. It will firstly be negative for brokers to take their own charges. If you like, you make profits. If you like, you make losses. They've charged their own spread. They've charged their own. They will definitely make money. So that you lose the trade or the trade hits your TP. Anyone the trade is doing, the broker is making their profit in as much as you enter a trade. They are making profit, and if they are charging commission, also you lose. It's either you lose or you gain. They will definitely pay the IB, the commission. That's to commission and the swap. Spread is what is this distance or the difference between the ask and bid price. All right, the difference between ask and bid price. That's spread. Bid price is the price that the seller is willing to sell. Why ask price is the price at which the buyer is willing to sell. The price at which seller is willing to buy, that's bid. If I want to buy something now, the price at which I want to buy it, that's bid price. Why ask price is the amount that the person that wants to sell it is putting on it. That would be the ask price. Okay, so that's where brokers are making their spread. I mean, they're making their money through spread. Once, like this trade now is negative, it's going against me. They've already made their own percentage. Once I close this trade now, their own money will go to their own account straight. It will go there straight. And if it is positive, if I'm in profit also, once I close it, they are making their own, they are charging their own amount without wasting time. All right. So, any question on that? This auto trading has to do with trading with bots. If you want to trade with AI, then you set it as automatic trading. You set it with API and VPN. That's what you use there. Okay. Any question? Another thing I want to talk about is session, trading session. We have four. We have major four trading session. Asian section. Go away. Let me go to calendar. Okay, so here now is calling it Sydney, Tokyo, London, New York. So we have Sydney, we have Tokyo, we have London, we have New York. This Tokyo should be also Moscow. Beijing beginning, beginning. So we have these four major section. We have the Sydney, we have Tokyo, we have London, we have New York. All right. So this session, like this Sydney now, has to do with when they are stock, when the stock of each of these countries they are active, when their stock is very very active. That's the session. Okay. Like this night now, we are in Tokyo section currently, as you can see, and it's overlapping between Sydney and Tokyo. So majorly these two section is always called Asian section. Always call these two Asian section. Majorly this time we are now call it Asian section. Like this overlap, the overlap between Sydney and Tokyo, we call it Asian section. So at this period is when you have major movement in the market. Price, there will be volume in the market. Price will move significantly, majorly at this overlap, all this overlap region, all these overlap zones. There's always a major move in the market at this point in time. All right, so we have these sessions. Another name that you can call it, it's what's this? Okay, so we have some people that classified into two: Sydney and Tokyo. They make it Asian section, London and New York. That's three sections. But basically, we have four of them. It's much more interesting to make it four like this. They have all their own significant way of trading, also, of which in our next section we'll be talking about all those combinations. Next thing now is to harmonize all this, combining two, three of them together for trade setup or for more confluences, right? One thing I will mention here also is to talk about Fibonacci retracement. Fibonacci retracement. Fibo, this it's, let me change the color to what it's visible. Fibo levels color. Let me make it green. Let me make it line. Or let me make it bigger for more visibility. Okay. This is Fibonacci retracement. The number starts from 0 and ends with 100. 0.0 ends 100. So the retracement has to do with this 61%, 50% retracement. Then it helps to show these are mathematical numbers that helps to show where price, likely places that price will get to, and it will change direction, or important places that we can take trades. How do you use it? You look for a swing, the last, look for a previous, let me put it that way, look for a previous momentum in the market. That is, look for where price actually moves significantly in the market. For example, here, I'm picking this now. You can see price moves significantly here. So I'm picking this, right? Now, at this point, price got here and moved. You can see when price was here, is changing direction here. Let me pick here change direction, and at this point now is in this 50% retracement. At this 50% retracement, you are taking a trade, a buy trade, enter buy. The price will continue to go up, and you can see here now is 161.8. When price got there, you can see market reaction. You can see market reaction back to 100, and it keep on moving again. Market breakout. If you shrink it, you will see another one up. These are calculated places that price will likely get to and change direction. Some people do add some other numbers to it. Some people do add some other numbers to this, like 75, 71.2, 71.9, 75, 81.2. Some people do all those calculations and added to it. So that's Fibonacci retracement. It helps to know where price will retrace to and continue. If you want to be doing break when price is trending, let me put it that way, when price is trending and you want to know where price will likely get to and to buy, that's retracement. It will move back and continue going. You want to know the places, then you use Fibonacci retracement to do the continuation on that. Okay. Since we know that price is always in three phases, price is always in three phases. We call this market structure. Market structure is always in three places: uptrend, downtrend, and consolidation or ranging. Uptrend, price is breaking higher. Okay, for example, now let's use this region here. You can see price move up, do retracements, move up again, small retracements, continue moving up. When price continue moving up like this, then you call it uptrend. As you can see, price is going up. It will move, come down small. This pullback, this pullback or price moving back like this is called retracement. Retracement has to do with trend, price trending and it's retracing. Price will trend and retrace, trend and retrace, trend and retrace. As simple as that, that's retracement. So you use Fibonacci to do retracement when price is trending. If it's moving up, that's bullish trend. If it's going down, that's bearish trend. And we say uptrend is when price is creating a new high respecting previous low. Price creating new high respecting previous low, that's uptrend. While downtrend is price creating new low respecting previous high. Price moving low respecting previous high, that's up, that's downtrend. Going down, moving low, creating a new low respecting previous highs, that's downtrend. And a ranging market is when there's no change in the highs and lows, when price is creating equal lows, creating equal highs, equal lows, creating equal lows, equal highs, equal lows, equal highs. Then we say price is ranging, just like within this place now. Let me map it out. So here in here now, you can see price is ranging. You can see it's creating it within this zone. That's a ranging market. In this ranging market now, that's where candle is failing to create a new high. It's creating equal highs, equal lows, equal highs, equal lows. A range. When price is ranging or when candle is ranging like this, it's creating pattern. And all those patterns we have names for them. So all this we'll talk about in the next class. Okay. So is there anything I need to talk about? This 318. So any question? Any question? So we'll be stopping here. We'll be stopping here. So if you have any question, ask. Any question? Any question? Amos, any question? Richard, any question? Are you there? Richard, Amos, any question? Nobody is typing. Is anyone hearing me? Anybody hearing me? Anybody hearing me? Or is my network having issues? Let me wipe all this off. Leads, 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 leads. Delete, delete. Access Bank kí ni mo tún ṣe báyìí? Ayé mi. Delete. And make chat remain plain. All right. All right. That's cool. But with the little I am able to do today, you can able at least to place trade. There's no special thing anywhere. It's just for you to understand any of all these analysis and make use of them. Make use of them. Don't run up and down on time frame. Since you are starting, don't run up and down on time frame. Stick to one time frame and make use of it. What you want, you will definitely get it. So today I recap on support and resistance. Okay, currently, if you've seen the way I do trade, you will realize that I do combine almost four time frames together. So there's no best time frame. None is best. Anytime I want to trade, like this afternoon, immediately I open my chart. Let me see. Oh, I've turned it off again. Immediately I open my chart. I didn't see anything. I go to minute 15. I was there looking at the chart until I see one pattern formation. Before there was spike, it was on 24. Price, the price was on 24 at that point in time. When I did the analysis, immediately I saw it, I was like, wow, this is a nice buy setup. Price peaked. And price peaked. And price peaked. The only thing I was now waiting for retest to sell and enter that zone. It didn't enter the zone until price closed. So there's no best. Nothing best anywhere except I just want to warn you. All of them, they work at their own pace, they work at their own time, they work at their own way, they work in their own ways. The only thing is the movement on H4 now. If movement on H4, if you do analysis on H4 and it's giving you like 500 pips, the same analysis is the same setup. You may see it on M15 and to just give you like 100 pips, 150 pips. That's just the difference between them. If you see the analysis on weekly charts, which may give you 2000 pips, if you see it on H4, it may give you like 500, 400, 300 pips. That's just the difference between them. But once you get the direction, even though on minute one, sometimes I'll do analysis on minute one and it will align with minute 15, align with minute 30, align with H4, and it will move and give a nice pips. So no time is best. No time is best. All of them, they are all working at their own pace, uh, at their own direction. And that's why most of the things I know that may cause confusion. That's why I didn't talk about them. I don't want you to get confused at all. I want you to be able to take your trade without any confusion. Set your stop loss. If it is stop loss, it's never a crime to take another trade again. The major thing is ensure that it's a good setup you are using that can give you good winning rates such that the day you will win, your losses will be over. Your losses will be over. That's just the major thing. It's like Richard is sleeping. So next class we'll be talking about liquidity sweep, rejection, smart money concept, ICT, all of them. We'll talk about it in the next class. So these 2 weeks I'm giving is for you to take trades as many as possible using what I have explained. The support and resistance. Even though if you want to be using indicators, you can use it also, but don't get it may confuse you. So for now, work with technicals. Use support and resistance. That's okay. That's okay. Use support and resistance. Which one did I talk about again? Okay, I talk about candlesticks today, depending on that, calculate stop loss. So majorly that support and resistance, work with it very well. Work with it very well because price action is basically working with the two of them. Price action is creating structures and it's moving. Richard, are you there or are you sleeping? Any other question? Amos, any other question? So within these 2 weeks, ask question as you watch through the video. You see anything, ask question. You can call me. Yeah, that should be today is 24. That's next 2 weekends. Let me check calendar now and decide on that. Go away. Yeah, I have this calendar. Next month. So let's look towards 6th of next month. 6th. So we should the class should hold between 6, 7, 8. That's Thursday stroke Friday night, Friday stroke Saturday night, then Saturday stroke Sunday night. It will be on 6, Friday night, Saturday night, Sunday night. Any other question? Richard, any other question? It's like Richard is sleeping. It's no more responding. So 6, 7, 8 will be the next class. 6, 7, 8 will be the next class. Yeah. Use the support and resistance. Pick any currency pair. Use M30. That will be average. Use M30 and pick trades. Use M30 and pick trades. You can do 1:4. Any trades you want to take, make it 1:4. So if you are doing 50 pips on gold, you are doing 200 pips on TP. if you are doing anyone you are doing, just ensure it is 1:4 trade that you are taking. All right. So bye for now. All right.